Hello, hello. Welcome back. If you're new here, welcome. My name is Kristyn. I'm an authorized infinite banking practitioner, and I help Canadian families and business owners find peace in their financial life and build the abundant lives that they were born to live by taking control back over their finances and redirecting more money back into their pockets. So today I wanted to sit down with my good friend Austin. Hey, Austin. So nice to have you here. I'm so glad we got to connect. I know Austin and I met on Instagram, of all places, and we just kind of started a conversation and really found that our content that we're putting out is very similar in the way that we talk about how we're using life insurance in our lives. And I really liked the way that Austin is approaching it. So, Austin, do you want to maybe tell us a little bit about yourself and how you got into the world of like leveraging your life insurance and using it in this way?
Yeah, absolutely. Well, first, just thanks for having me. I saw a lot of parallels between what we do, and your content, like my content, is very raw. It's straightforward. You can really tell if someone's really kind of selling behind the scenes or pushing a negative design in about 2 to 3 videos. So I immediately connected with what you were doing. And after talking to you a couple times, a lot of our stories are very similar into kind of how we got into the industry and started this whole process. But I'll kind of start with the problem that I was facing. I was a real estate investor, or still am a real estate investor. And the issue that I had, along with a lot of people, is the way they go about saving up for capital. A little bit about my background. So I was a former Army officer, West Point graduate, and what I was doing was putting away about 70% of my income per year. I've done that since I was 17, and I'm 30 now. And my previous strategy was really just dollar cost averaging the S&P 500. So I would max out all my different government accounts, my Roth, my TSP, which is a 401k equivalent. And then ignorantly, I was using my high yield savings account to save up for my different rental down payments. So not only was that being taxed the entire time, but when I take that capital out, you of course start from square zero again. And that really led me to my turning point because I started to get frustrated. I was frustrated because I was not scaling at the rate that I wanted to go at. So that's when I really went about to go get a real financial education because it's not taught in schools. It's not taught from your parents sometimes. It's you have to go on bigger pockets. You have to go seek mentorship. You have to pick up books and actually read them to go get your financial education. And after I did that process, if I could break down two distilled lessons that I learned was leverage and effective tax planning, not tax filing strictly, but tax planning and strategy. And I realized with what I was doing before, I was not really using those two strategies at all. And then I found the realm of IBC and everything and how you could implement leverage safely and effective tax planning with some of these whole life designs. And that really solved my real estate scaling issue and also helped me fill in some of my greater whys too. You know, I'm very forward with my what I'm doing behind the scenes on my channels and everything. And it's helped me pull in some of my philanthropic visions into reality quicker. Um, I teach jujitsu over here in the Phoenix area, and then I have a little sister that's disabled too. So you probably broke down the Rockefeller method before on your channel. I've seen you do that. But with what I'm doing, I'm putting all my policies in a trust to help pull in some of those philanthropic goals into reality. So that's a little bit about my story, kind of what I did before and how I got into the IBC space specifically.
I love that. So, were you practicing it? Tell me kind of how you got to that aha moment. Because for some of us, like, you saw a YouTube
Yeah.
video or something and it just kind of clicked. And others, I know for me, it took me about a year of watching every video I could find, reading a gazillion books.
Yeah.
How did that kind of come about for you?
Yeah, I'll break down that process. I've always been really disciplined and passionate about wealth building. So every real estate transaction that I did before, when I mentioned I was saving in that high yield savings account, I'd bring my plan to every single person involved, and I'd bring my plan to my mentors too. So I'd break down like, hey, here's my Excels. Here's where my capital is going. Like, what do you think? And then eventually I had one conversation on leverage that completely changed my financial future, honestly. And I had to really I had to check myself. I had to check my own ego and really question the strategy that I was doing. Because I was approached on infinite banking about 5 to 6 years ago, and I immediately wrote it off as a scam. But I had to check myself, and I was approached on it again. And I was looking at this person's methodology and calling it a scam, even though he's built multiple 7 to 8 figure businesses. But then I was taking advice, even if it was from a CEO or VP or president level, but they're working 100-hour weeks. They're not in the position that I want to be at. nor are they progressing that at the rate that I wanted to go at either. So I really had to check myself and question what I was doing. And very rarely do I bite down on things, but when I bite down really hard. We were talking about this last time. So in the span of about 10 months, I did 30 books. I no kidding, I put books underneath my pillowcase when I was figuring this out. And I had easily, but over 2,000 hours of conversations and research to really figure out this process and see if it was a good idea. And that's really how I got into the space and how I started the whole thing.
So, did you have policies in place yourself before you went and decided this was a good idea to get licensed? Which one came first for you?
Yeah, so my agent kind of I did my first policy and then I got my license shortly after. I had a really good relationship with my agent. His name is Dave Beefort. He also has a great channel. He was a former Air Force Academy guy. Then I was a former West Point guy, which is the Army version. So we had some similar parallels there. And he's been a great mentor to me as well too. Very forward and direct about being in the similar values forward space that me and you are both in. So we kind of worked through that process. He helped give me some resources to really train me appropriately. And then right after I got my first policy, I realized, what it could do for my real estate game, but also for my greater purpose too. And that's why I got into the industry. And then as I was learning too, I saw, and once I became competent and educated, I saw all the negative actors that were out there and honestly the straight up ignorance that is out there. And I was like, this is crazy. Like this is so crazy. And people need to know this because what it could do for your why and what it could do for your family. So that's another reason why I got into the industry as a whole too.
Yes. Yeah. I found it so frustrating when I was first coming into the space because I didn't see the bad actors in it until
Hmm.
after I was already in it.
Yeah.
And I was fortunate to have, followed the rabbit holes to the right information. Like I kind of went to the Nelson Nash Institute, which is like,
Hmm.
he's kind of the father of the infinite banking concept. And I was fortunate because I went there first and really started watching videos of people that are practitioners and really that are very basic to what he does. Like they stick very closely to his methodology and his
Hmm.
values. And, so I was fortunate that I didn't see the bad actors until I was already in the space. And
Yeah.
once you see it, like the people that are just peddling, um, I don't know if you can speak to that at all, but I've seen there's some like crypto gurus out there that really are talking about talking about infinite banking and you have to have a private trust, put all of your assets in private trust, and they're giving all of this advice to tell people that they put everything into these things and they're going to be massively wealthy.
Yeah.
Then it'll make sense that but you have all these expensive things in place first.
Yeah.
And I'm not saying they're bad actors. I don't think they mean ill will or anything. I just don't think they're
Hmm.
well informed. And especially in the Canadian landscape, I just did a video or a couple videos on private trusts in Canada because it does not operate the same as it does for you guys in the US. You don't have the same tax savings that you do. And it's not as much of a tax shelter as it is a tax
Hmm.
planning strategy here and a
Hmm.
control strategy. And I mean, similar to what you're doing with your goals where you have your policies in your trust, in that case, it would probably make sense Canadian wise as well. But yeah, going back to that, it's frustrating watching people that are not very informed giving a lot of advice as though they are.
Hmm.
And it's
Yeah.
it's hard watching people follow those kind of rabbit holes.
Yeah. I wish we could do like some type of equation or like really see the stats because like you said, like some people are just ill-informed. They're taught this process and then like they don't know what the negativity that they're doing behind the scenes. But I mean, sometimes there are predators in action. And like, from my background too, there are people out there that want to do terrible things to you. That's just a straight up fact. And that is disgusting. But yeah, there's a balance there. Some people are just ill-informed and some people are just straight up predators. I don't know what that split is, but yeah. And to kind of address your question you asked, have I worked with a client that's in those spaces or fallen through some of those things? And yeah, I actually just got finished with a client here earlier a couple of weeks ago, and her case was so bad that she may have a court case against this person that she bought the policy from. And like those people are out there, they'll sell this process of, hey, you could sell off your mortgage quicker And then the agent is making 500, 600% more on the commission. And they're selling this idea of a financing vehicle, but they're not setting it up correctly. These have to be set up in a specific way. It's not rocket science. You could learn it in about 10, 15 minutes. But if you're not setting up the policy in the correct manner, you could really damage yourself. And there are people out there that will sell that and make a lot in commission. And it sucks because that ruins the scene for everyone else involved too, like me and you who are really values forward and getting the right policy design. And to preface this too, or kind of put an end note, the right policy design is the one that's based on your goals and what you're trying to do and when you're trying to get there. That's I don't want to knock like straight death benefit policies, but for a lot of the clients that I work with, the whole intent of these policies is to go buy assets quicker, and you have to set that up in a very particular manner so you could go have that high liquidity and go buy those assets.
Exactly. And I love what you said there about it being so personalized because it's a very different world if you're looking at someone who is young and investing in real estate and, they're in their late 20s, early 30s versus someone who's in their 60s
Mhm.
and common misconception that everyone thinks they're too old for life insurance in their 60s. No, you're
Mhm.
not too old. It looks different because we're using it for different purposes. You're not necessarily using it to access a lot of cash in the beginning. You're using it more for an estate planning tool and how you're going to transfer the funds that you do have, especially if we're using the registered accounts like the 401ks for you, the
Yep.
RSPs for us. We have a major tax problem if we're transferring those to our kids
Mhm.
when we pass. So we're kind of trying to get around that. And that's not as much of an infinite banking issue as it is a broker issue because you have to be able to navigate all of these different scenarios. It looks very different
Mhm.
depending on what your goals are. And the type of policy that we use, even, is not the same
Yeah.
for one person versus the other. So it ultimately comes down to what your goals are and what you're
Yeah.
looking to do, both short term and long term.
Yep. Start with your end state and then backwards plan to make the right design that is meant for you.
Exactly.
Yeah.
Yeah. And that's what a lot of people I feel get wrong about when we start talking about the infinite banking concept. Yes, there's a lot of immediate, you can use it immediately. It can help you immediately. If you're in debt, it can help you alleviate some of that.
Mhm.
But you have to be a long-term thinker. You
Yeah.
cannot only be looking at today and what the expense is today because it's not an expense, but
Mhm.
looking at only what your money's doing today and not make every decision without looking at the future.
Yeah.
Everything you do today
Yeah.
affects that.
I always break it down. Like if you're doing your IRR calculations and just looking at a vacuum inside of year one, then of course it's not going to make sense. But when you look 5, 10, 15, 20, 30 years in the future, that's where you see the effects. You see the tax-free growth in there and what that could do for your asset acquisitions and everything. So like, yeah, beautifully said. It's not, don't look at it in a vacuum in the first couple of years. Think it's long-term thinking.
Exactly. And even I've had these conversations with clients where we all have those blinders when it comes to debt. Like debt is bad, loans are
Mhm.
bad. You don't want to
Yeah.
carry that. You don't want to pay interest to someone else, right?
Yeah.
I have that conversation day in, day out. But when we're using that and running our money through the policy first, I
Mhm.
would much rather see my clients carry policy loans if they need to,
Yeah.
if that's what they need to do to max out their policies,
Yeah.
the premium
Yeah.
that they can put in. Because when you put premium in, that grows for the rest of your life.
Hmm.
The loan, you know what? You can pay back that loan. You can make more payments next year. I'm by all means, I'm not saying don't carry the loans forever. That's a terrible idea.
Yeah.
But there's ways that you can negate it. And so that's why it's important to just keep that relationship going and keep the conversations going.
Yeah.
And
It-
I feel like a lot of people get that wrong too,
yeah.
broker wise, because that's how you can tell the bad actors because they're the ones that sell a
Mhm.
policy and then ghost you and you
Yeah.
don't
I
hear
love it.
from them.
And to expand on your idea of debt there's good debt and bad debt. What's cool about the debt from his whole life policies, it's backed by guarantees, which is very advantageous. That's why banks are the largest owners of whole life insurance. And then it's cheap and flexible. Like it's about 1 to 2% less than the market. I got a lot of people, I work with investors a lot in the real estate space, and a lot of people like HELOCs. But if you take out a HELOC from your home and the market crashes, like what kind of position are you in? That could kind of suck. And they're also pretty expensive. Like HELOCs are probably between 7 to 9% right now. All my loans that I use for my policies are around 5, which is it's cheap and then it's flexible too. Like you said, you don't want that interest to ride. You don't want to steal the peas, as Nash would say. But
Yes.
it's nice to have that flexibility, especially from a real estate point of view and a business point of view too, because you may have a good year, you may have a bad year, you may have a good month, you may have a bad month. To have that flexibility with your debt is very powerful when we're scaling our portfolios.
Yes. Okay, so can we go back to that for a second? Because I know you're a real estate guy, that's how you got into this.
Yeah.
Can you walk me through what does it look like as a real estate investor? How
Yeah.
exactly are you using your policies? How are you running money through the policies, funding them, using the policy loans?
Yeah. I'll break down transparently. I'll give you my numbers of what I did for my first policy, and I'll kind of walk you through the story of what I did there that first year. So I mentioned before, I was dumping about 70% of my income per year towards the market. So I took some contribution dollars from my Roth IRA and then my TSP, which is again that military or government 401k. I took from my contribution dollars for both of those, and I dodged the early withdrawal, and I didn't pay any ordinary income tax on that because it was from those contribution dollars. That was a lesson learned that I picked up. So once I rolled all that money over, I took about 100K from those contributions and some dollars from my savings account too, my high yield savings account. And that's what I used as the one-time lump sum to actually fund my policy. Because remember, we have that one-time lump sum capability. And then the money that I was routing to my high yield savings account, I started to capture in these policies. So I had about 170K of capital first year. With that 170, I deployed about 120 to go buy some cash flowing real estate. I did about a 20 to 25% down payment for those properties, and those properties generate cash flow. That cash flow pays off that cheap and flexible debt that we talked about, and you just run that system. And then essentially, I just set a cash value line inside of my policy. I don't go below that, and that covers my expenses or my emergencies for my houses and emergency for myself too. And then once I have enough capital to go make another acquisition, I turn that over again. So I do about 4 to 5 turnkeys per year in the Midwest. And then I stack private lending notes as well too. And I make a private lending transaction about every month. Again, both of those assets generate cash flow. Cash flow pays off the interest that I pay to the insurance company when I run that system.
Nice. One thing I just want to note, because most of my audience is Canadian, is we don't have the capability of putting a one-time lump
Oh,
payment
really?
into no. So
Interesting.
we do have to spread it out, but there's strategies that we use. Like I would set, we always have that minimum, your base payment and then the maximum that you can put in.
Yeah.
And I would set the maximum as high as we can. We max fund it for the first couple years. Maybe we put the cash into an annuity or something where it's going to grow a
Hmm.
little bit while we're waiting.
Yeah.
But also, we have the option to backdate a policy by a whole year. So we can
Okay.
essentially
Interesting.
get 2 years in at once. So
Gotcha.
if you wanted to get 100,000 in, I would do a max funding of $50,000 for 2 years. And
Hmm.
then the minimum funding would come from the cash flowing part of that cash flow from the rental properties.
Got it. And then I'm sure
So
you would.
just a different flow of how it works. But I just wanted to clarify that because
Yeah.
I know my clients have heard me say that many times. So I don't want to confuse
Yeah.
them by thinking that we can do a one-time lump sum.
Yeah. With your clients, of course, you would need more premium to, fulfill that lump sum dump. Do you, with your clients, would you just open up another policy like right away, within 6 months to a year? Is that something you would do to kind of solve that issue?
To solve which issue, sorry, if they had to
So like,
have more cash to come in.
yeah, let's say like you had a client who was trying to get more capital inside of a life insurance policy, and they kind of max out what they could do for that first year on that first policy. Would you just open up another policy within the next couple of years?
So we can keep putting it in. Like we would
Okay,
have, I'd have it set up with that life pay so that they could put the maximum of that $50,000 in every year.
okay,
Their
I gotcha.
minimum would be, 7 or 8,000,
Hmm.
depending, depending on how it's built. But there's a lot of flexibility there in how we can use it, how we can build it. So they can put just the minimum in the years that
Yep.
they don't have the cash flowing, and the years that they need to go bigger, then they can go right up to that max.
Okay, I gotcha.
Yeah.
Cool.
And some carriers are more flexible than others and let you,
Yep.
carry over that room.
Yep.
But yeah, there's a lot that goes into building the policies just so again, so we know we have the cash available if you want to make your system bigger later.
Yeah, yeah.
Sometimes we use, and you probably do this too with a term conversion, where
Yep.
you have a term rider on it, helps you get the maximum nice and high, keeping the minimum low. If they want to expand the system, we just convert the term over, and they can add another policy without having to go through the medical underwriting and things.
Yep, yep. Love it.
So
I was
yes,
yeah, good stuff.
yeah, awesome. Okay, so tell me a little bit about um, your goals. Like, what's the
Mhm.
good that you're looking to achieve?
Yeah, yeah. I always like to start, let's start direct with my mission. My mission, both personal and my business, is to grow and give with abundance. And not to be alarmist, kind of we talked about a little bit into these waters during our previous conversations, but I really feel like now we are in a time and place where we need to provide bottom-up refinement. Just kind of turn on what's going on social media and the news right now. Governments are not going to save people. Corporations are not going to save people. It is going to be people that are going to take care of people. And I am honestly a little bit fearful. Like if we don't start doing that, we may pay in a very serious way. And that's really the direct action to what I'm trying to do in my business. From joining the military to being a jiu-jitsu coach, I've always just wanted to help people. That's been a core fundamental value of my whole career. And what I'm trying to do is really implement the Rockefeller method. So Rockefeller method, kind of in a nutshell, trust hold holding companies hold different assets. Most important asset is that properly structured and funded whole life insurance. What I'm trying to do with my system behind the scenes, I have multiple policies. All those policies are going to go into a trust system, which I could set the rules and regulations on to help pull some of those goals into reality. So, this quick story: my sister, there's some of my family's over in Florida. There's this great program called My Autism Connection, but I found that a lot of people, there's like 2 dozen families that can't afford their care right now, and a lot of times the people that need that care the most can't afford it, which sucks. But I could step in more of a philanthropic manner. And like, let's say I wipe out all of Florida's expenses for this program for indefinitely. Like that's something that you could do. And I used to get really kind of nihilistic, and I always thought that, maybe I couldn't change things on a large scale. I feel like that's a really common issue that we tend to have. But there are ways around that. And if we unite together with people that do this, you could really pull some of those goals into reality. This isn't a far off like shot. This is just that this is reality. You can do these things. Um, you don't have to have billions of dollars. You could do this on scale, and you could be the person in your family chain to change that schedule. Because my parents came from a very humble background. We didn't know anything about money. My parents were both in the military and everything. And then it's in my position now. It was kind of given to me. I definitely had to work and everything, but I didn't grow up getting shot at or I wasn't on fire, but I have the opportunity to go get an education and really carry forward what they gave for me. So, and you could do that too. Anyone could do that.
Yes. Yeah, exactly. And I love what you said about just having to take care of ourselves because nobody's coming to save us.
Yeah.
That's the last couple years has been more and more and more clear. It's more evident every day
Yeah.
that you have to take control of your own life, and you have to take care of your family. You have to take care of everything in your own realm first.
Mhm.
But money is not evil. And that's a hard
Yeah.
thing for a lot of people, especially I find Christians, it's a block for us that we think that it's being, there's a difference between being humble and being broke. Like you
Hmm.
can't, we're called to help poor people, but you can't help poor people if you're poor too.
Yeah.
Like you
Yeah.
can't,
No,
there,
it's true. It's true. It's absolutely true.
there is
Yeah.
nothing wrong with making money, and you don't have to apologize for that. You have
Mhm.
a responsibility then to share it with other people, and that's my personal conviction. But I feel like when I have funds come in, it's not just for me. I'm doing this not just for me. I'm doing this for my family. I'm doing this for my community. I want to be able to help people beyond myself and
Yeah.
set these bigger goals. So I love that you're setting that right from the very, very beginning,
Yeah.
because it's so important. And I think a lot of people, that's where we get the money is evil thing,
Yeah.
because a lot of people just get greedy and they start hoarding it for themselves.
Yeah. I like this saying, oh, tell me what you think about this. So like you and I both know that the tax dollars that we pay really isn't going towards the causes that we are told, right? It's probably going to the things that we're both pretty aggravated about on the news right now. So my kind of angle that I kind of talk and teach about people, or when I'm speaking with people, is, well, what if I increase my financial literacy? I lower my tax liability, and then I just give that money back to a one-on-one thing. It's in a philanthropic manner. I actually know that my money's going to a good cause now. I'm helping people, not just throwing money to the machine that's funding the things that I'm aggravated about. It's so easy to fall into that trap and get caught up in nihilism of this whole like disgusting structure, the asset management industrial complex, the medical industrial complex. It's so easy to fall into that trap, but there are ways around it if you increase your financial literacy, but it takes steps. You see all those books over there. You got to pick up some books and the books behind your shoulder too. You got to go seek mentorship. You got to read the books and learn how this process works. And but there's a fight. There's a way around it. You know.
Yes. And let's talk about mentorship for a second because you've mentioned it a couple times now.
Yeah.
So tell me about the importance of mentorship for you personally. And
Mhm.
then for people that are thinking about doing this just on a client level, that they're thinking about doing infinite banking or getting into real estate or anything like that.
Yeah, the power of networking and mentorship is arguably like the number one factor that's helped me grow. And I think like a lot of people don't want to ask for help, but I see it as an ultimate kind of like cheat code. I go to everyone with my problems, or that's a take back that statement. I go seek mentors and talk about the issues that I'm having, and like you can that person has probably already crossed the problems that you're going into, and you can learn the distilled lessons and kind of get a shortcut. And you don't have to go through past, Z through K through Z. You just have to go through past A through C. So you save a lot of efficiency when you're talking to these people. So finding the right mentors is great. And, a thing about mentorship as well. I feel you should have mentorships on different levels and in different categories too. So a financial mentor, I have a jujitsu mentor, your spiritual, your faith-based mentor, have mentors across different categories that complement your value set. And, then have mentors on different levels too. I have mentors that are in the 100 door space. I have mentors that are in the 1,000 door space and, have different echelons. And then you can learn different lessons from those different people to all help you take their lessons and really help you build yourself up. So that
Yes.
was so that was part one, and then part two was like, can you rephrase that question again? Kind of what you do on the client
So part two
base?
was more for clients, like,
Yeah.
so you in your personal life, but then what do you just encourage clients to do when they're working with you? Is it just, I'm going to come to you, Austin, I trust you 100%, and you just tell me what to do?
Oh no, it's absolutely like education is a huge piece of that. Like self-education. Like I always tell people to read the books. I don't think there's any substitute for reading books. You have access to me. I tell my people for the rest of my life, whoever dies first. So you have access to me for anything that you want. And I try and make the process as simple as possible. I kind of created this really cool resource called the Vault. And I mentioned before, I read all those books and everything. I'm a nerd. I take notes on every single thing that I read. So I hung all those notes up on there. There's like key takeaways, timelines, and everything. So I hand that resource off too. Like some people like to learn different ways. I got a one pager videos, but self-education is so important. And I don't want to move forward with people until they're competent and confident on what they're doing because you are going to be your own banker. And if you are not competent on how to be a banker, then you can hurt yourself. And I don't want to do that for anyone. I'm not in the business like you are of pushing these policies. We are about setting up a system for people so they could go get to their why quicker. If you are not competent and confident on doing that, then I don't want to move forward.
Thank you for saying that. I appreciate that so much because I've had clients come to me after working with um, kind of going through a process maybe with other um, I'm not going to call out specific practitioners or anything, but that have worked with other people in the same space that they were pushed to put an application in,
Hmm.
then we'll figure out how it's going to work. Like
Yeah,
like first call, I expect you to read the book and then we get on a call and we're going to do your application.
yeah.
And I feel like that's so backwards and wrong. I
Hmm.
am and I don't feel like it's just because I'm new and I have the excess time. I don't think it's that. For me, I want to get to know my clients first. I've had a
Yeah.
couple people that I've had to let go just because I didn't feel like we jived enough that I could help them for the rest of their life.
Yeah,
because I don't
absolutely.
want to get in that position. I can refer you to someone else that would maybe be a better fit,
Hmm.
or someone else who maybe understands what you're trying to do better than I do, or I bring someone else in maybe.
Hmm.
But I I really don't like the idea of pushing someone into an application and then, oh, we'll wait and see. For
Yeah.
me, by the time that client goes to an application, we've done two, three, four, sometimes it's 10
Yeah.
Zoom
Yeah.
meetings
However
where
long
we
it
talk
takes.
it through.
Yep.
Especially if you're someone who has more of a complicated case and you have things going on. I want to know that
Hmm.
you understand this plan, that we together have thought out this plan. And we can
Yeah.
always change it, but I want you to be really comfortable with what you're doing before we
Hmm.
even set it up.
Absolutely. Yeah, like sometimes we don't even know if it's a good fit for someone. Like you have to have those conversations about goals and what are you trying to do and when are you trying to get there. This may not even be a good fit. I don't know what's going on behind the scenes, but we have to have that dialogue. We have to figure out like what's going on to even see this as a good fit. And then we create this right structure that's meant for you and what you are trying to do and when you are trying to get there.
Yes. So what do you think when you're talking with a client? Is there anything that would hit you as like a red flag, or like maybe this isn't a great fit for you, maybe not right now?
Hmm. I'd say like a lot of people kind of run into that issue of discipline and not really wanting to get involved with the process. Like if someone's not willing to learn and actually get educated on how this works, like I don't want to work with that person just straight up and being very straightforward. So that's probably like the number one issue that I would say. Like if you don't want to learn like how money works in this entire system, then this probably isn't a good fit. Because like we talked about, like you could hurt yourself if you're not competent on how to operate this thing. It's not rocket science. These things have life insurance has been around longer than banks. It's not a crazy thing to learn, but you gotta like at least give yourself 30 minutes or pick up a book and learn. And if you're not that type of person, then honestly, like we're not a good fit. With my background, with a lot of the people that I work with are former Army officers. I work with some surgeons and people in real estate, and those people tend to be a little bit more, forward. Aggressive is the wrong word, but willing to learn, we'll say.
Yes. Yeah. Yeah. I've had some that got on the call and said, oh no, I didn't take the time to I didn't watch that video that you sent me. I didn't do this.
Yeah,
And
it's
I'm thinking, well, I'm sorry, but I don't think it's going to work.
mhm.
You don't have to know everything under the sun. You don't have to understand it completely. You don't
Yeah.
have to be, I'm still learning every time I read the book. I learn new things,
Hmm.
but you have to be open to learning. And when you're closed and you're not open to even
Yeah.
trying, that those are the people that it doesn't work for.
Yeah, and it could be so difficult too. We kind of talked about this last time, but we found that politics is really similar to finance. And when you're communicating with people and kind of introducing different ideas, it could be really challenging for things to get through. And that's probably another kind of avatar that I really don't want to get involved with, like people that are just dead set on this specific strategy. And I don't even want to hear anything that you're saying. Honestly, I was one of those people before about 5 to 6 years ago. I was one of those people. And, you couldn't convince me otherwise that not dollar cost averaging the S&P 500 was not the optimal solution. And it took that turning point for me, really checking my own ego and looking at what I was doing and kind of going through that turning point that we talked about before, checking my strategy. But yeah, that's another avatar. Like people tend to get really, really stuck in their ideas on finance because it has a tendency to get involved and intertwined with egos. But um, just got to break apart from that to really allow things to get through.
Yes, I loved you did a video, I think, where you were talking about that, where you compared it to like I was wearing a MAGA hat for my
Yeah, yeah.
when I was
I was
talking
wearing
about money.
yeah, I
And
was
you were
wearing an
just talking about
S&P 500.
it was
Yeah,
the tribalism, right? Where
yeah, yeah.
you
It is.
just
It really is.
that tunnel
It really
vision,
is.
and
Uh-huh.
you might maybe don't even understand how it really works, but that's what you think.
Yeah, yeah. And then kind of like going into we'll see this idea and then we'll immediately write it off. So like you could see like whole life insurance or like insurance is a scam. And like sometimes I agree with that, depending on how this is structured and what that agent is doing behind the scenes. I'm like, yeah, absolutely. But this is not normal insurance that me and you both design. This is very particular design insurance with a specific end state and intent in mind. And but people will hear or see that negative example, then they'll throw out the baby with the bathwater, if you will, and wipe off the whole concept. I know that's true because it happened to me and it happens to a lot of people, so
Yeah. And unfortunately, I feel like the people that don't want to learn are the ones
Hmm.
that are getting sucked into those kind, I hate using the word scam, but those kind of
Yeah.
scams, the ones that
Yeah.
are not built for them, the ones that are going to lose them money, the ones that are not going to work for infinite banking. Like
Hmm.
here we have Universal Life, you guys have your IULs,
Yep.
and by design, they're just not going to work for this. That every
Yeah.
part, there's no part about them that takes the risk away from you,
Hmm.
that that optimizes what's happening in the background with you taking loans out, that the loans are working for you. That doesn't happen.
Yeah.
There's so much. And the only person in those cases, I do agree with the people that get online and say, well, the only person making money is your life. You've probably got that on
Yeah.
comment a
Yeah.
lot on your videos, right? Oh, you're just selling life insurance because you make a commission.
Yep.
And those are what they're talking about are those policies that people get locked into. And a lot of people
Hmm.
don't realize that they have, and correct me if this isn't the same in the US, but when you set up a universal life, there's a 10-year surrender charge.
Hmm.
So you have no access to your cash value or very
Yeah.
little access to your cash value for the first 10 years.
Yeah.
What we're talking about, you can have access to that cash value day one. It's so different. And if and the risk in those cases, and this is what burns me up so much,
Hmm.
that advisor, there's no risk for them. They can sell
Hmm.
these really crappy products, get someone locked in, and that person's put in, they front loaded with $100,000.
Yeah.
And we can do that with Universal Life. You can put a lot of cash into them. And with that surrender charge, they're locked in. If they cancel it, they can't access that money.
Yeah.
So their surrender charge is so high that they
Yeah.
can't cancel it in those first couple of years. Once that 10 years is gone, guess what? The advisor's safe. They don't have to worry about that person canceling now.
Yeah.
If they do, there's no
That is
charge.
what happened to that client that I was telling you about.
Yeah.
She was in one of those policies, and it's just absolutely disgusting to see those things go through. It's so unfortunate. But kind of talking about, we'll hit just kind of briefly here on the concept of IUL versus whole life. Kind of go back to that original preface statement. I feel like the right design is meant for what you're trying to do and when you're trying to get there. I've seen some people be successful in the IUL or UL space, kind of using them more as investment vehicles. But I'm kind of mentioning about what I'm trying to do and who I usually work with. Like we're in the business of constantly applying leverage. I'm doing a real estate transaction every couple months. I'm doing private lending transactions sometimes a couple times in 1 month. So if I'm applying leverage and my cash value is subject to change, that's kind of like building your warehouse of wealth on a foundation of quicksand. We want a stable, rock solid, guaranteed foundation, which is in whole life, not other products that are tied to the market. So that's really never passed my principles in terms of leverage, but that's just my personal opinion and
Mhm.
ties into the type of people that I work with inside of the real estate space.
Yes. And I should clarify, I've seen a lot of Universal Lives come across my desk, a lot.
Hmm.
99% of them are terrible and
Hmm.
were sold for infinite banking purposes
Yeah.
and they won't work.
Hmm.
But there are a couple that I've seen that were designed for the right person, that were designed in the way that they were intended. But
Yeah.
it's so rare because
Yeah.
people just don't understand. Even if it's not a bad policy, the people don't understand, the clients don't understand what they have to do to keep it good.
Yeah, and I found this angle really interesting too. I found at least when I'm working with people, they come to insurance to escape volatility. They're escaping the volatility of the market. So if we're trying to escape volatility and we go back to a product and insurance that is backed by the market, well, we're going back to where we started from, you know? So that's just another angle to kind of throw out there. Again, not a hit on IULs or any type of insurance that's tied to the market, but just with the people that I work with, in my opinions, in my personal opinions.
Yeah, yeah, exactly. For infinite banking purposes, it's
Mhm.
not ideal. Okay, I don't want to go on too much longer. I feel like we could chat all day, and
Yeah.
we have many times.
Yeah.
But I so appreciate you being here. Is there anything else that you want to add or that you would like maybe our audience to know about you or um,
Yeah,
maybe,
I'll throw out this one concept. About to go on and speak about this too, but it's kind of combining the world of real estate with the world of insurance. There's some really slick stuff you could do kind of combining these two systems. So doing a cash out refi or a partial 1031 and then using these policies as a net to capture that capital. So like let's say we do a cash out refi for 300K, instead of rolling that into the next deal because we have to consider reality. What if you can't cash out refi? What if you can't sell? What if you can't 1031? You could do that refi, capture that capital, in this case, let's say 300K. Now we're getting interest and dividends tax free at 300K. Then we can immediately deploy that capital out and go buy more real estate. It's another tool to augment your system for going to go buy properties quicker. And it helps address a lot of the risks that people run into when they're rapidly buying properties. So there's some really cool systems you could do, tying in insurance with the world of real estate and other wealth systems too. So that's just one thing that I want to throw out there. All my socials is that Generational Growth CO. And my name's Austin Johnson. I really appreciate your time here. I really love talking to you. Like I said, we could go for another 2 hours probably if we wanted to. We have so many overlaps with kind of how we got into this. But yeah, thank you so much for your time. Thank you for what you're doing. I remember reaching out to you with your content and finding the right people in the right location that are doing this in a values forward fashion is pretty rare. And I just want to compliment your channel and what you're doing and how you're helping people. And thank you.
Thank you. I appreciate that so much. And we'll put all of your links down below in the description so people know where to find you. And
Sweet.
yeah, if I can leave one last thing, I just want to note that if you are someone who's looking into, if you're kind of curious about how you can use insurance policies, maybe you have existing insurance policies that you're debating whether you can use it to maybe fund real estate deals, or you have, capital that you're not sure how to deploy. I just want to kind of say again how important it is to work with people that know what you're trying to do, people
Mhm.
that have been there. I'm not an expert in everything, but that's why I talk with people like Austin.
Yeah,
I'm going to bring on another real estate investor. Austin introduced me to Mike Wolf,
yeah,
amazing guy. We'll bring him on in the next couple of weeks. But that's the whole point of this, so that we can talk with experts, people who really know what we're looking to achieve. And we always want to be learning from people that are smarter than us. So
absolutely.
we don't have to make the mistakes that they did to make them that
Mhm.
smart.
Mhm. Mhm.
So thank you so much for being here, Austin. Appreciate it. And we'll talk again soon.
No problem. Cheers.
Bye.
Bye.
Thanks so much for joining. If you found this episode helpful, please give it a like and hit subscribe. When you're ready to take the next steps, click the link in the description to access my free resources and to book a call to start. Your future self will thank you. Until next time, live free.